Good afternoon. Time to have a look at the markets. Shares in the Asia-Pacific region dropped after the U.S. Federal Reserve Chairman Jerome Powell signaled further hikes ahead after raising rates by 75 basis points as expected and called discussions on pausing the tightening cycle premature. So Hong Kong's Hang Seng Index fell 3.1% in the final hour of trade, leading losses in the wider Asia-Pacific trading session. The Hang Seng Tech Index falling 3.5%. Locally, we had the rand weaken in early trade again after the U.S. Fed signaling that it will not slow down the pace of its interest rate hikes. So we thought it would be quite interesting to basically look at the monetary policy divergence or even pace of monetary policy that we've seen, especially when it comes to the U.S., South Africa, as well as the Bank of Japan, which was the outlier. So you've heard us talk about a restrictive monetary policy. So in this particular case, we're referring to one in which we purposefully slow down economic growth to a point where demand decreases significantly enough to quell inflation pressures on an ongoing basis to return inflation and expectations to the target rate. So what I have on screen for you is the U.S. Fed funds rate. And it's quite important because at this particular point, it actually has a really big impact throughout the U.S. economy, influencing credit cards, mortgages, as well as car loans. So in this particular case, we're seeing the U.S. Fed trying to restrict inflation by slowing down the economy and tightening conditions. We'll go to the U.S. inflation chart right now, where we'll get to see the U.S. inflation target around 2%. Right now, inflation for the U.S. sitting at around 8.6%. Which is quite considerably high. We're now going to move on to a chart where we get to show you what the South African dynamic is versus the US. And it's quite tricky here in this particular case because the FOMC, that is the Fed, they get to meet every 6 weeks versus South Africa's MPC, which meets every 2 months. So then you get to see that South Africa's interest rates have fallen behind the US, especially from a cumulative quantum perspective. So in South Africa, we've priced in by year end 86 basis points. If we take out yesterday's interest rate announcement by the Fed, that's 75 basis points, that will to date make the U.S. interest rate hikes at around 300 basis points. Comparison to South Africa, we've only encapsulated about 275 basis points. And I suppose on November 24th, South African Reserve Bank could increase rates by 100 basis points. But if we then put in that 75 basis points that we saw yesterday, we're pretty much just in line. But let's go to the Bank of Japan now, which was the outline. We've been talking about it for quite some time. So what we have on screen right now, that's just the Japan bond yield. So Japan is an interesting one because they kept their short-term interest rates at around minus 0.1%. That's had a significant impact on the yen. We've seen the yen drop about 22% versus the dollar. It's made imports quite expensive. And everyone's saying that the yen, we might start to see a recovery only when the interest rates between the Fed and the yen start to converge. So that is the picture as it stands right now. But let's look at things from a markets point of view with Patrice Rousseau, who's the Chief Investment Officer at Ashburton Investments. Patrice, thank you so much for your time. Given, the Fed announcement yesterday, what's your take on the markets right now and the market reaction as well?
Yes, Anastasia, and good afternoon to you and your viewers. We had a great October after a very tough September. So markets were really on the front foot, and it really came to a halt yesterday when, especially after the announcement of the Fed hike of 75 basis points, which was really anticipated and baked into the price. When the Fed Chair Jerome Powell started to speak, and he re-emphasized the point that they would be fighting inflation until they got to the 2% level, which, as you said already, is sitting currently at over 8% in the US, I think markets really started to digest the fact that the Fed is far from finished. That's the one thing. So we might see another hike by the end of the year, as you mentioned, and maybe into next year. But more importantly, that the Fed is likely to keep rates well above what is called a neutral rate. So it would keep rates high for longer, so that we're unlikely to see a rate cut by the Fed until well into the second half of next year. And that's really led to quite a large sell-off. Markets in the US were initially up at the open, but it sold down, as you said, quite aggressively later on in the session.
I know you're not an economist here, but for a second, do indulge me. Does it make it complicated then for the Reserve Bank? I mean, what are your then expectations for November 24th when our Reserve Bank meets?
Yeah, it's a very good point. I think you mentioned already 86 basis points being factored in for the next Reserve Bank meeting. Our governor, the Reserve Bank, has been ahead of the curve, but now they're likely to fall behind if they stick with the 75 basis points hike, which was very much what was expected by the market. So participants are starting to wonder whether it's not going to be 100. That's why you get the 86. Some people think 75. Some people think 100. The whole key thing here is, firstly, South African inflation seems to be rolling over, which is not yet the case in the US. Secondly, we have quite a fragile economy as opposed to the US, where we still have high levels of employment. So the risk in South Africa is, if the Reserve Bank goes beyond the 75 basis points, the economic growth impact is going to be quite severe, a lot more severe than a country as buoyant, as strong as the US economy.
Economics news aside, any company news that caught your attention?
Yeah, but today, very negative day for the resources stocks, the commodity stocks, with a few trading updates. Sibanye-Stillwater catching the eye, down almost 11% on a pretty weak update. Retailers doing a lot better. They kind of flat for the session. We had a strong trading update from Truworths with sales up 13%, really recovering from a low base and their UK business turning around. So some sort of light there if you look at retail stocks, with Surprise, Truworths, Clicks showing some green on a sea of red.
Let's look back at the month that was, October that is, because you mentioned September was quite terrible. Then how would you characterize the trading month of October?
Yeah, October, interestingly enough, usually it's a very bad month for financial markets. We've had the Black Monday a few decades back, which happened in October. We've had a very strong global performance in terms of financial markets, led by NASDAQ shares. Some of them were up 8-9%. So I think it was a relief rally after a terrible quarter, which ended in September. The JSE followed suit. We've seen financials doing quite well, but more importantly, it was the mid-caps and property stocks, very much the SA Inc., the SA economy shares, which seem to be performing quite well, despite the fact that we've had the rolling blackout. So it was a good month. I think more of a recovery story. Unfortunately, this new month is not starting very well. So maybe, November is going to be a much worse month than October.
Before I let you go, any earnings that you are keeping an eye on, whether it's the US or even here locally?
Yeah, so the earnings are still coming strong and fast. In the US, we've had the big tech stocks report. There's still about 25 companies to report. Now, I think still a big focus in the US is about consumer discretionary shares, the retail shares, to see the state of the consumer. And on our market, I guess we've also had a slew of trading updates. I think we're focusing very much as to how the consumer is doing, the impact of interest rates and inflation on disposable income.
All right, Patrice, let's leave it there. Thank you so much for your time. That is Patrice Rousseau, who's the Chief Investment Officer at Ashburton Investments, giving us his perspective in terms of the markets. And he did mention that in South Africa, we still have some of the trading updates still flowing through, and we'll still have earnings from the likes of the Foschini Group as well as SPAR yet to publish their figures. We'll try and get those CEOs on the channel to explain to us the periods that was and also what they're foreseeing, especially when it comes to the South African economy as well as the consumer. We're going to take a quick break, and when we come back, I'll be with you for more news, so stay tuned.